I have this profound distrust of the effectiveness of regulation in general, because I feel like it is likely to sort of be taken advantage of, even with the best of intentions, which is what, the work that you've been doing. It feels like eventually people will find ways to use that
Yeah.
to their advantage. And so I'm curious, for me, part of it is when we're talking about having like the idea you mentioned earlier, kind of the idea of a free market and how that's kind of an illusion in a lot of these situations. How do you sort of square that circle, or where do you come in on the idea that ultimately Bitcoin creates these incentives that should drive a free market versus regulations and protections for investors?
Well, you raise a very good point, which is that regulators often get captured by their regulatees, and end up basically becoming um, enforcers of the status quo, and block new innovations and block out new entrants that might be doing things a little bit differently. And that's just the nature of regulation. It's very interesting to see how, I mean, I'm living that, right? It's very interesting to see how things have evolved, because the states in the United States, and I know this is a global show, but for the non-US folks, the US has 50 different state regulators, and then it's got a federal regulator. And in the insurance system, all the regulation is done by the 50 states individually. In the banking system, there's something called a dual banking system, where you can either be a state chartered bank or a federally chartered bank. They all can do the same things. So they have what's called parity. And then the broker dealers is all done federally. So that's a confusing thing. Oh, by the way, money transmitters it's also done state by state, all 50 states. So all this gets confusing for non-Americans. But here's the punchline as it relates to the question you just asked. The state financial services regulators, in almost all cases, have in their mission statement economic development. So they're going to be more open to innovation because it's part of their mission to not be a gatekeeper that keeps all the new entrants and all the innovators out. But the federal regulators, none of them, to my knowledge, have economic development in their mission at all. So what ends up happening is that they do become gatekeepers that tend to keep innovators out and tend to reinforce the status quo. That is the nature of the systems that were created. Now, Congress could change that. It could create an economic development or innovation remit as part of the mission of the regulators, but it hasn't done so. And I don't recall whether the Lomas-Gillibrand bill includes something like that, but keep in mind, it's open for comment. They want comments. This is not the final version. It's just the first version they've released for discussion. And so that is one thing that may make sense, is especially if the CFTC becomes the regulator of the Bitcoin spot markets, make sure that it's got an innovation remit as part of its mission, as opposed to just basically enforcing the existing laws, because that's when industries tend to become insular. And what I just described, by the way, is not unique to financial services. I think all the regulated industries, it happens that way. The cynical way to talk about it is the phrase regulatory capture. But again, I don't think the regulators necessarily intend to always reinforce the status quo in their regulation. What they're doing is responding to the system that Congress set up for them in the first place. And I do think the states have a better system, because they have in their mission statement a requirement to think about economic development.